Good evening, ladies and gentlemen. My name is Akumila Majija, a BMF board member, but also working for Prudential Life Insurance, looking after the French-speaking countries as head of retail, strategy, and corporate business. I want to welcome everyone tonight, and especially our keynote speaker, Miss Dr. Maria Ramos. I read your profile properly. And obviously, welcome the leadership of the BMF and led by the president, Mr. Andile Nomlala, and then the staff and all the guests that are participating. This is our third webinar under our theme, The Unfinished Business of Economic Transformation. We had our first one with Professor Lumumba, and recently we had Dr. Phumzile Mlambo-Ngcuka. We're continuing with the same theme, but today it's even more interesting. It's more relevant for the African context, and especially post-COVID and everything that we have seen, how digital finance or digital financing, financial inclusion and stability, and how that would work for Africa. The theme is provides crucial, is identified by the organization, will inform the tenets of unfinished business. The African continent is striving to harness digital technologies in the hopes to develop more inclusive economies. However, a majority of individuals and small businesses in developing economies have no access to basic savings and credit products, which only hinders economic growth but perpetuates poverty. The webinar seeks to shed light on how the solutions presented by digital finance can be extended beyond conventional financing and to the benefit of microeconomics to foster economic inclusion and financial stability. Our speaker tonight will tackle this subject in detail, and we're hoping that you would engage through questions where you can use the Q&A tab at the bottom of the screen. We will also allow some people to pose questions or comments directly to the panel or to the speaker. And please feel free to engage. I think it's a very important topic. It's one that I find exciting. It's one that will change the face of Africa and create future wealth for those that have been left behind in the past. The session is recorded and we will provide a link on YouTube once we've finished, and everyone who RSVP it will send the link to them. I don't want to waste much time. I see people are still logging on, but I think I want to introduce our speaker, who should not be unfamiliar to most of you. It's someone that we've known, someone we've looked up to for a number of years. Mrs. Ramos, or Miss Maria Ramos, she's a corporate leader and banker and has served as a non-executive director on a number of boards. To mention but a few, Richmond SA, Anglo Ashanti, the PIC, and the Saudi British Bank. She also most recently, she co-chairs the United Nations Task Team Force on Digital Financing as part of the Sustainable Development Goals. She served, for those of you who might remember, she served as the CEO of ABSA Group and has helped through a number of significant milestones. One was the acquisition of Barclays Africa subsidiary banks, as well as the sell down of Barclays PLC, and setting up a new strategy and refresh the brand that we see today. She was very crucial, or she was at the center of rebranding the entire bank in Africa. I remember when I was still in Ghana, ABSA rebranding and taking center stage, and everyone was asking, what is this? So I think it's one of our success stories and one of our greatest leaders that we have seen. She's previously been a DG for Treasury, but also she was the group CEO for Transnet. And she serves on a number of boards. I've mentioned some. I think one of the things that I need to mention, though, she's part of the advisory group for the Blythe Ethnic School of Governance with Oxford University. And her contribution has been recognized through numerous awards, including being ranked in the Fortune magazine's 50 most powerful women in business for a number of years running. She was the CNBC Africa Women Leader of the Year in 2011. And then she got the Vets Business Schools Excellence Awards in 2010. And she was named the Sunday Times Business Leader of the Year in 2005 and the Businessman of the Year by SA Business Association in 2001. So if that does not move or impress you, I don't know what else will. Dr. Ramos, because she's got a couple of honorary degrees, from Stellenbosch and also from the Free State University, will take us through this discussion. It's very Some people are asking, what is digital finance? We will know tonight. And financial inclusion and what role we can play in driving financial inclusion in our various corners. Over to you, Dr. Ramos.
Thank you very much, and good evening, everybody, and thank you, Atumile. Uh, I To all the colleagues and friends who've joined this evening, thank you very much for joining. And I particularly also want to thank the BMF for the opportunity to speak about this very important topic and to share with everyone the United Nations Secretary General's report and the findings of the report on digital financing for the SDGs, the Sustainable Development Goals, because that's really, I'm going to be talking about that primarily this evening. And I am going to be doing that because the report addresses itself to the issue of digital financing. It didn't focus only on Africa, but it did focus on the issue of digital financing. And on the task force, we had 5 Africans. And I co-chaired the task force with Achim Steiner, who is the director of the United Nations Development Program. And there were 15 other leaders and innovators from the financial services sector, from technology, from the regulatory space, and from in the international development communities. But as I said, apart from me, there were 4 other Africans on this task force, all of them, frankly, much more distinguished than I am. And Achimile, when you were reading out all of those, all of that stuff in the CV, you made me really feel very old because all of that stuff is such a long time ago. I'm essentially retired and sitting on a number of boards. And one of the great things about it is I get an opportunity to do some of this work. But the other 4 Africans on this task force were our former deputy president and now the undersecretary general and executive director of UN Women, and she spoke to the BMF last week, from Zelem Mlambo, orally Adam Soleil, who's the Minister of Digital Economy and Communications for the government of Benin, Patrick Njogora, who's the governor of the Central Bank of Kenya, and Natalie Jabangwe, who's the CEO of EcoCash. So you can see that out of a task force of 17 people, there were 5 Africans on that task force. And I think when the Secretary General put this task force together, he did it, and he created this balance and put enough African leaders on it, because for Africa, digital financing for the Sustainable Development Goals is, of course, of primary importance. The other thing to note about what we did in this task force is we engaged with thousands of individuals and organizations across the world, and they shared their work, knowledge, data, ideas voluntarily and frankly very enthusiastically. And they helped the task force provide proof points along the way, both in terms of our mandate and also the relevance of the work we were doing. And the task force's mandate was very pointed. It was to both recommend but also catalyze ways to harness digitalization in accelerating the financing of the Sustainable Development Goals. And the Sustainable Development Goals are fundamentally important to getting us to a more fairer, more sustainable uh, horizon. Of course, when we started our work, there was no COVID-19. And as we progressed, we had the timeline to finish this work in June this year. And as we entered 2020, COVID-19 hit us and hit the world with extraordinary speed and pervasive spread. And of course, an unprecedented global economic and social crisis uh, has been the consequence of it. And the issue around this is, of course, is that unless we unless we act collectively, the effects of this crisis will continue to be felt in the decade ahead. And in fact, even if we act collectively, the effects of this crisis will be felt in the decade ahead. But if left unchecked, they will shape the life prospects of an entire generation of young people. That's what the data is beginning to show, not just across the world, but of of great importance for us across our own continent. Millions of jobs, as we all know, have already been lost on this continent. Informal workers' wages, according to ILO, are expected to decline by over 80%, which will further exacerbate income inequality and poverty. In South Africa, we know from the data that the economy shared 2.2 million jobs in the second quarter alone, reducing the number of people employed to just over 14.1 million out of 39 million people who are of a job in the job market, deepening the crisis of unemployment. And the growth numbers range from the -6.5%, which is the Reserve Bank's projections, to the IMF's projections last week of -8%, which are more or less in line with what Business for South Africa had projected. Across sub-Saharan Africa, because today's topic doesn't deal just with South Africa, but looks across sub-Saharan Africa very importantly, this pandemic has already triggered the first recession in 25 years. And that's kind of an important frame because we can talk about digitalization and the prospects of it, but it's also important to remember that for the last 20, 25 years, our part of the world, our continent, has actually been growing. This is the first recession in 25 years on average for the continent, and growth across the continent is expected to be, according to the IMF, -3% for 2020. And the World Bank's latest estimates show that about 100 million people across the world will be plunged into extreme poverty, which is defined as living on less than $1.90 a day. And across this region, across the sub-Saharan region, sub-Saharan African region, that number could be as high as 40 million. And I'm not sure what Phumzile said last week, but female poverty is disproportionately high in our part of the world. So it was in that frame that we had to complete the work of this task force. And what became very obvious to us was that digitalization, which we had debated intensely, what it means, what is it and what isn't it, how much is it doing for financial inclusion, and is financial inclusion really having the impact we're looking for? But what became very obvious is that digital transformation and digitalization in particular came into its own during this crisis. And just three small points, but important in terms of immediate responses. Digital money transfers permitted governments to provide immediate support to citizens, alleviating personal and family crises and helping to stabilize economies, even in very poor countries. E-commerce became a lifesaver for millions of households and hundreds of thousands of small business. And health and education services turned to digital solutions and continue to turn to digital solutions to provide services to people both in urban and rural communities. And so the report talks about how we continue this progress and build back better, and provides an action agenda for that. It talks about the historical opportunity that we have, and it talks about financial markets in particular, but the historical opportunity that we have to deal with that sector, which, as we know, is already being disrupted and will continue to be more and more disrupted, whether it's banks or fintechs. And just before we started, we were talking about the insurance sector, the banking space, the products, the shape of the markets, policies, the regulatory environments, standards and norms, and how do we deal with that? It allows, the report talks about digitalization providing this transformational opportunity not only to deepen and enable financial inclusion, but also to shift the paradigm towards a citizen-centric finance approach. We know that people care about financial returns, but we also know from the work we have done, not just in this task force, but more broadly, that they care about climate. People care about biodiversity. We all care about the communities we work and live in. We care about the infrastructure that is needed at community level. We care about how governments spend money, how efficiently, how effectively, what it's being used for. And we have live examples of that in South Africa at the moment. And so the report talks about and goes through many examples of that and how we can support the empowerment of citizens individually and collectively in financial decision making, both as savers and lenders, borrowers, investors, and importantly, as taxpayers. In the report, we say, and I quote, digitalization's heartbeat is the valued aggregation of many small parts. And we'd say that because it enables huge amounts of data to be collected cheaply and processed to achieve the outcomes that serve people's choices better in ways that people need. Technology, digital platforms, and the application of artificial intelligence are changing the shape of finance. They're creating opportunities to deliver better and more sustainable centric and citizen-centric outcomes. But we also know that, and the report found that digital infrastructure and digital finance is about creating access, availability, and improving affordability. Mobile phones mobile payment platforms have turned mobile phones into interfaces with the financial system. And across the world, just over 1 billion people are using them for these purposes. In sub-Saharan Africa, 60% of adults have a mobile money account. We were talking because we always quote Kenya and M-Pesa. But that's because when it started in 2007, it was groundbreaking. And the reality is it's groundbreaking today still. There are over 33 million users of M-Pesa in a population of 50 million plus people. And 80% or so of adults in Kenya have a mobile banking account. That's a higher percentage, by the way, than the US or the UK in terms of mobile banking account penetration. And what's also important is that on the back of those success stories, Kenya has been able to build other success stories and other platforms. And in the report, we talk about Mohali, which is a system that's enabled interoperable transfers of money across Africa. And there are a number of other platforms that have been built. But it's also for governments. And we also speak about the opportunities that digitalization and innovation creates for governments. Digital IDs, digital literacy programs, creating platforms for data exchange between public and private sectors to facilitate the digital delivery of services, such as in Benin or the Gambia. Digitalization has boosted efficiency and transparency of budgets from local to national levels. It's also improved payments and procurement and created transparency and allowed for cost savings and improved accountability. In it's important, to realize that actually when you look across the world, some 3.2 billion people currently have a digital ID. Whether that digital ID is issued at a national level or at the local level, such as in countries like India or Estonia, or by some NGO or some commercial organization like Facebook, for example. But we know that having a digital ID makes a lot of things easier and more possible. It also enables the governments to deliver services uh, more efficiently. And by some estimates, shifting from cash to e-delivery of services can save up to as much as 40% per transaction. So those are savings worth having. There, of course, are digital risks, and they are real. And the report, and we need to consider these, and they're in the report. But anyone who's been in this digital space knows that the risks of exclusion, bias, privacy are critical from a development and sustainability point of view. We found, for example, that about 45% of digital financial accounts created in the spirit of financial inclusion, and Khumile, you were talking about financial inclusion, have not been used in the past year due to factors such as usability, costs, safety, relevance, skills gaps, amongst other things. Sometimes you create the product, but you haven't thought about whether that product is really what people want, about the costs, about data, about what you're asking the customer for. And that's also very, very important. The other, of course, is that you could replicate biases that exist in the data. And whether those biases are around race and gender, we have to be aware of those, because they get if they get replicated into the algorithmic decisions that are being made, you end up uh, replicating poverty, replicating racial bias, and so we need to be very careful of that. And of course, in this space, the other very real risk is cyber attacks, which in 2019, when we first put the data together, in the first half of 2019, there had been some over 4 billion records affected by cyber attacks. And so if you've anywhere in financial services, actually not just in financial services, anyone who deals with data, and that's virtually every company on this earth today, knows that cyber risk is a very big thing. The report talks about catalytic opportunities, and I'm going to go through them very quickly, but it talks about them in the context of the financial resources which are available in the world. And the point was, the Secretary General's point was, is this really a financial problem, or is there enough finance and we just need to find ways of unlocking them? And actually, like so many other times, we came to the conclusion it's not a lack of financial resources. When you consider that there's some $185 trillion channeled through the global bond and equity markets. Trillions have been are needed to be invested in climate change and mitigation and adaptation and renewable energy for scaling up carbon markets, but we know that carbon markets are beginning to scale up. We also know that there's some $5 trillion needed to finance SMEs, which are much of the source of the world's employment and livelihoods. But we, against that, know that globally, we have saved some $23 trillion annually. And that this has been the case over the last few decades. We've seen an increase annually of global savings. And in the least developed countries, savings have increased 15-fold to a quarter of $1 trillion annually over the same period. So there is savings out there. It's just how we use it. And can we use technology better, and particularly digitalization, to unlock those savings? So there were 5 catalytic opportunities that the report looked at. The first is how we channel domestic savings into development financing. And the report goes through that in quite a bit of detail. The improvement, of course, the availability of data, which allows capital markets to improve returns to citizens, the ability to channel savings better, to create greater opportunities for capital markets and financial institutions to work differently, the use of fintechs and data analytics to expand their database in a way that unlocks savings differently for development finance. The enhancement of financing for SMMEs was the other catalytic opportunity. And again, the partnerships with fintechs and data analytics, which are designed to expand SMME lending and networking. And I'm just going through them very briefly. The third area, which I've spoken a little bit about, is the digitizing of public finance, budgets and procurements, ways of making contracts more visible and transparent. The fourth was to embed SDGs in finance, into data into financial and capital markets. And this is particularly important as well when we think about the market that's beginning to build up and the appetite beginning to build up for things like green bonds and impact investment. These are growing markets. And when we think about how much investment we need to do in this space across every country on this continent, if I think about South Africa, every time I think about what we need to do in this country to shift the energy mix, I just think about what the opportunity there is to fund ourselves and to think differently. And the fifth is to shape the consumption decisions through improved information and the choice architecture. Nagumile, you are talking about insurance, but robo-insurers is just one example of this. The opportunity to create products for people based on aggregating data, actually even from you're talking about very poor people with what looks like minuscule amounts of savings, but it's actually the ability to aggregate and to use data and to use digitization and artificial intelligence to do that. And of course, if you think about all of this, then we also need to make sure that we have the ability to do this in a world that is appropriately governed, so we can secure people's rights over their own data and data markets. We can mitigate the risks which are inherent in market concentration. And we know market concentration is an increasingly big issue. We just have to think about the large players which are getting bigger and bigger. And we have to make some inroads into the international regulation of digital finance towards a more inclusive, to make it more inclusive of developing countries' voices. I'm just about the way we went about putting all of these things together, and we decided that we couldn't just write a report. So as we went along, we identified a number of what we called Pathfinder initiatives. And I just want to talk about 3 because they are on this continent. The first is an international dialogue on global digital finance, which has been developed by the government of Kenya and Switzerland. And it's about setting some rules of the game so that we can ensure inclusive dialogue and governance for digital platforms. Otherwise, we run the risk of being left behind on the continent in setting some of these rules. The second is a piece of work, an initiative started by Gambia, which is focused on advancing financial inclusion. And it's really a piece of work which includes the private sector and government and a number of agencies working together, local and international, to promote investment in digital infrastructure, because you need the infrastructure in order to get this done. And the third is actually in Zimbabwe, where EcoCash, as with inputs from a digital investor exchange, IEX, in the US, and the United Nations Capital Development Fund, have launched a world first stock exchange platform that builds on data with the objective of providing long-term financing for small and medium-sized enterprises. Now, these are not, there's a number of other initiatives which are just as exciting, which are not on this continent. But I thought I'd just pick on those three because they are on this continent. But equally, there are other partners who are working on other things which are of interest to what we do and create opportunities for the continent too. One of those is the database that's been built up by Refinitiv, which is put together on a real-time database over 60,000 infrastructure projects all over the world, with 25 years worth of infrastructure projects with profiles of people doing these projects, which makes it easier for us to understand who's done what and where they have been done. So let me stop there because I know people will have lots of questions, but I wanted to use the report simply because the report pulls together quite a lot of this work. And it also helps us to focus on what is the opportunity here, how much of this is happening, where is it happening, and what can we learn from each other? And particularly as we confront the crisis of COVID, how do we build these platforms? How do we collaborate across the continent and outside of this continent for greater opportunity? Thanks very much.
Thank you so much, Maria. I've got a couple of questions actually that have come through.
I'm sure.
But I've got a comment as well, which maybe I'll kick off with a question, the Q&A session. And just to remind everyone, please use the Q&A tab at the bottom of the screen to ask your questions. And some have indicated that they want to ask questions direct. So if you want to do the same, please raise your hand and I will note you as we move along. But just to kick it off, one of the, for me, financial inclusion is one of the key components for inclusive development. And obviously, we know Africa has been lagging behind compared to other continents on this subject. And if you know, it's less than 1 adult out of 4 in Africa have access to an account in a financial institution. And there are benefits. Maybe we're not really taking into account those benefits as African governments or African nations. But what do you think, in your view, is the reason why we are not embracing financial inclusion or even driving it? Policies could be there, but the implementation is lagging behind.
Okay. Do you want to take a few questions, or do you want me to answer them one by one?
What do you prefer?
I don't mind. It's up to you.
Let's do one by one, then we can have it more in time.
So, this is a big continent. There's not every country is the same. So, I mean, if we look at a country like Kenya, we cannot talk about there not being a focus on financial inclusion, because there absolutely is. If you look at a country like Ghana, right, I'd say there's more and more of a focus on financial inclusion. So it's a mixed bag. I think part of it, there's a number of things. Often it's about the regulatory environment. If one of the things one learns from the M-Pesa example is that the regulatory environment was very supportive. I mean, one of the things why you can't replicate M-Pesa in most countries, and we've tried, everybody wants to replicate M-Pesa. It doesn't work for a whole range of reasons. In a lot of cases, it doesn't work because the regulatory environment is different country by country. So a lot of it is the regulatory environment. Some of it is because we think that financial inclusion is simply the case of providing an account. And that's not the case. Often it's much more than that. It's understanding what it is people's needs are, how you deliver to that need, how do you deliver in a way that is affordable, how do you deliver in how do you deliver the product that people can use. It's the reason why, you know, you can actually provide somebody with a bank account. But if 45% of those accounts are not used, it tells you that you're not actually providing the right product. So I think it is quite complex. It's also a question of once you've provided the product, you have to give people you have to give people training. You have to also make sure that the data is available. In a lot of countries, including South Africa, data costs are still too high. So does the infrastructure really support digitalization? And I think that those are some of the challenges we face. It's not just about the product. It's the entire ecosystem that needs to be supportive of financial inclusion.
Thank you.
I don't know, that certainly is what we found, and that was, you know, that's been my view. But you've also been in that market, so maybe this shouldn't be a monologue. It should be a conversation.
It definitely is a conversation, because one of the things that we saw to work in Ghana specifically was the involvement of the regulator, and them willing to be lobbied when it never made sense. There were issues around recognition of airtime as a financial instrument to pay for transactions, which would have killed the same thing we're trying to achieve on financial inclusion, because mostly participate that way. But then they were willing to change some policies that they had put in place after we made noise. So I think most of it is really the regulator plays a big role, as obviously the central banks have a role to play in this regard. There is I want to recognize, there's a hand from Mpho Moseki. I don't know if you still have your question. If Kuli, you can bring her on and she can ask a question.
Hi, can you hear me?
Yes, we can hear.
Yes.
Oh, great. Hi, Maria. Thanks so much for spending time. My name is Mpho Moseki. I'm the chairperson of Gauteng Province. Thanks, Ace, for running with this. I think you've answered my question in part around the role that the regulator, both of you, Ace and Maria, around the role of the regulator plays in us as SA catching up, because I mean, Safaricom in Kenya partnered with the government 2014 already, 6 years of SA, we still don't have anything to match. So I wanted to pull on your past experience as DG in terms of what do you think we can do to just fast track? I think we've known that we've needed this a long time ago. We need to just start implementing. Thanks.
Sure. Mpho, do you have any easy questions? Look, I think you raise a very important question. It's financial regulation, right? But it's also certainly in South Africa, it's also the telecoms regulators. So I think this is both. On the financial regulation side, I do think that there is a space to think through what it is, whether or not we need a different kind and a set of financial regulations, because the regulations actually already allow, there's a threshold in terms of what you can do from a FICA point of view, which is always kind of the big deal in terms of banking. And actually a lot of people that are, that need a very basic bank account can really get it done because they fall below that threshold. The problem, though, is that it's not just that. It's about whether you can get that done. You can get, uh, whether there are other things in the system that impede a more vibrant, a more vibrant, sort of fintech stroke payments platform. And I think it is worth having a look at that and saying, having reviewed this, as this environment is shifting so fast, this is more than just thresholds on KYC. This is more than just financial thresholds. This is also about, do we have the environment that allows us to be as competitive as we need to be in this space? So that's on the one side. I think on the other side, the ICASA issues, and it's not just ICASA, it's also about the entire infrastructure and ecosystem, and on the tech side, on the providers of broadband, so the tech companies, and licensing, whether or not the government has moved fast enough. And we keep hearing that that spectrum is going to be auctioned and it's going to be this and that. I think we actually do need to move to those spaces so that we can have that done. So I think a review is not out of order, and then being very focused on what needs to be done and implementing it. Achumile, you're on silent.
Sorry, I've got Tasneem Fredericks, who's also a deputy president. She's got a hand up, and I think she also wants to greet you, Maria. Please come. Tasneem.
Hi, Maria. Can you hear me?
Yes, I can. How are you, Taz?
I'm good, thanks. I'm happy to sit and listen. I said to Atumile, I'm so glad that I'm not having to host or needed to do some heavy, hard work to prepare for this, because I see that when you said you're retiring, you actually meant you are not going to sit around and do nothing. You were actually going to do some hard work. When I look at the report, I see a lot of work's been gone into this. And yeah, Maria, I mean, just to say, how are you doing? And thank you so much for making time for the BMF. It's nice that you haven't, left the, office of not CEO, but, that you haven't left the public arena as such. So yeah, thanks for making time for us. And I think just a small question from my side, hopefully not a tough one like Mpho's. I'm going to speak to her side after this and tell her she mustn't give you such a hard question next time, even though you answered quite well. I think, Maria, I like a lot of what you said. I liked, you spoke to me, what you said that spoke to me most was not leaving anyone behind. I think that's very important, that we don't leave the majority of South Africans behind. And part of my question was going to be, can you define, what does financial inclusion mean? And you've said it, you said it's this value chain. And I think for the ordinary South African, to feel part or to feel financially included, what does that mean? There's issues like access to credit. I mean, infrastructure issues aside, the fact that we don't yet have 5G, issues like the the cost of banking. Why are we paying such, ginormous bank charges as South Africans? When we go to places like London, we see big adverts to say, zero interest rate, zero bank charges. Why are we not there yet? So before we even talk about financial inclusion, are we not systemically excluded before we even get our foot in? Are we not already on the back foot? And how do we fix that so that we can then start the journey? Because I feel like we very much are left behind. And then how do you draw us in as the ordinary South African? I mean, I was shocked, and I'm jumping around a bit, but I was shocked when the banks came forward during COVID-19 and said that they were going to waive their bank charges for social grants. I mean, I was shocked because I think there was an assumption on my part that, people who received social grants were not being charged for drawing the very little money that they get from government. So I think that the banks, if we look at partnering and talking about, how do we bring South Africans into being financially included, what is it that the banks can do, from their side? So, I mean, that's a lot of questions, actually, not just one. Sorry.
Yeah, that's a lot of questions, Tasneem, and not just one, and they're not easy to answer. But I think the issues around financial inclusion are not just about having a bank account. So of course they are about much more than that. And in this report, we talk about the title of the report is People's Money, harnessing digitalization to finance a sustainable future. And that's, we spoke a lot about what we were doing and what we were talking about and why. And the reason why we didn't focus just on financial inclusion, narrowly defined, which is just giving people access to the banking system, to the financial system. We were talking about the entire sort of the financial infrastructure as such, was precisely because every component part of it is important and is undergoing change and disruption. And actually digitalization provides an historical opportunity to change that. But it actually does need, it does need to happen differently. And so when you think about banks, and I don't want to talk for banks in South Africa. I have retired. I have retired, so to be very presumptuous of me to talk about any bank, including the one I worked for 10 years. But the fact is that banks also have they're complex organizations, and they're not a simple payments, they're not a digitalized payment system. They're large organizations, they employ a lot of people, they run lots of different systems, they've got big legacy systems that they have to take with. They are banks, and so they have got a huge amount of compliance to deal with. They have to carry capital, and there's a cost associated with that capital, and they take on risk. And what we talk about in this report is to say that what digitalization does is it gives you access to different sources of information, to different data. And if you get that right and you do that at scale, you are able to reduce a lot of other costs. And it's the reduction of those costs and the scale in the reduction of those costs that often allows you then to provide banking services on digital platforms, which can actually get to very low cost to the user, to the customer, to you and me, to the users of the bank's services. And in some cases, actually to zero cost. One of the things that you don't pay for in many countries in the world is cash withdrawals at ATMs. But a lot of countries don't have the same cost of carrying cash, of transporting cash, for example, that banks in South Africa do. And so there are all of those issues, but there is no doubt that you have to constantly ask yourself, what are the costs? Are those costs fair? Do those costs enable inclusion, or do they create barriers to inclusion? And actually, are you providing people with enough information, the right kind of information, so that that they can make choices and decisions? And we know in South Africa that the bank, the traditional banks, the big banks, are being challenged by new entrants into the market, by digital banks, actually not just by banks, by fintechs too. And so, it is becoming more competitive. Banks are asking themselves, what are we doing? Are we doing the right thing? Are we doing it in the most cost efficient way? What is it that our clients want? Do they want all of these services? What are they paying for? And what do our costs look like? Most of the costs that there need to be taken out often are people costs. And then we know what the consequences of that is too. So, a lot of there are a lot of issues here to think through. But there's no doubt that as consumers of services, we have to, digitalization offers an opportunity to constantly get better services, to get more access at a much reduced cost. And in some places, as scale builds up, at close to zero cost to the consumer.
Thanks, Maria. I think I want to come back to the report in terms of what is the aim of the report? Is it meant to be a guide for governments or for them to develop their policies on financial inclusion and digital financing? And also, if that is the case, is there a distinction on how this needs to be implemented from various continents and take into account whatever limitations or challenges that a country would face? And especially that we know, especially in the African continent, not everyone will have access to the tools that are necessary to drive this digital transformation. Does the report touch on those challenges and how those can be addressed?
So the report does touch on a number of challenges. It wasn't designed as a guide for anything, because people don't take very kindly to guides, and also guides of we live in a very complex and diverse world, and this is our own continent is complex and diverse. So to think that you can put together a guide is a little ambitious. So we didn't really do that. We worked with lots of different people. We collected a huge amount of input, and then we said, well, from all of this input, here are things, here are these catalytic opportunities that we think might be useful and might provide some things that people can take away and continue to work on. And actually, we were very clear right from the beginning that we didn't want this to be just another report that sits, virtually or physically on a shelf. And so a lot of the Pathfinder initiatives are things that have already started. So we used the members of the task force with people we were working with partners to the task force to start developing ideas. So you'll see in the report, whether it's the 3 or 4 I spoke about earlier, but others. I mean, there's a very interesting piece of work that's ongoing in Bangladesh, where task force members, the government of Bangladesh, the United Nations, is working on developing using digitalization and a payments platform to gather savings in communities, to gather savings from very poor people to finance infrastructure at a local level. So if you need a school at a local level in your community, we're using a local payments platform to gather some of the local savings to put in towards the building of that school, rather than just going to raise capital in the capital market to do that infrastructure project. And in that way, people who can get a bit of return on their savings, which they would otherwise not get, they're getting a school. The government is not so dependent often on foreign funding, because not everybody is as, has the deep and liquid capital markets that South Africa has. In fact, most countries don't have that. And so the report has done that, and it's catalyzed a lot of these experiences, and these dialogues and these experiences are ongoing. And we're hoping as well, from a regulatory point of view, the example I cited with Kenya, that's ongoing work, and that's government work. So in that case, it's the government of Kenya with the government of Switzerland working with the United Nations to hopefully formulate and advance some regulatory changes that will serve the interests of developing countries.
Thank you. Questions are coming in. I'm trying to, some of them you are answering as we move along, so that's good. I want to ask those questions. There's a burning question coming from Thabiso Nothana. Thabiso, please come through and ask your question.
Thank you, Akumila. Can you hear me?
Yes, we can hear you.
Thank you. I think this would qualify me to call or to refer to our guest. I mean, two honoraries from two esteemed institutions in the continent. I should be referring to her as Professor Ramos, right?
No, you can just call me Maria.
That's
when I've actually written a PhD myself, you can call me doctor or professor. Actually, I am an honorary professor at the moment, but yeah. But
amazing,
thank you, Thabiso. Thank you.
Pleasure. By the way, I think the country still need a female finance minister. So I'm not sure if you say that you have retired right now, but I think, you should, consider that.
There's a lot of other women more competent.
Absolutely. I mean, even considering that, our former governor of the Reserve Bank is a female, now is the governor. I think the next one you should also be considering. So retiring at this point, I don't think is an option anyway. No. Anyway, going to my questions, and I think I should somehow, off-ramp in terms of that. I was dying to ask you this question in terms of, I mean, the president recently has unveiled the recovery and the reconstruction and recovery plan, which was received warmly by most labor and business. And I just wanted to take your thoughts on that, because I think it would be quite interesting to hear your views on that, which I believe myself was quite a beautiful plan. Secondly, since the current administration of the president took over, I think it's just over 2 years right now, we have seen the work that has been done, the Hawks, the National Prosecuting Authority, the Asset Forfeiture Unit. We've seen how SARS is currently doing. And also your former employer, Transnet, is currently making profit, and they have promised that they'll be paying dividends to government soon. And I think that's quite promising. With the negativity around the country right now in terms of, the country's direction, and I think, it would be important to hear from someone like you anyway, to give some hope. Are we heading in the right direction as a country? I mean, these are some few of those, but I think there's a lot of positive activity that we can draw from what is currently happening? What is your view in terms of the country's direction from those two? Thank you, Akumile.
Thank you.
So thanks very much, Thabiso, and thanks for those questions. I think on the president's recovery plan, there's a huge amount of work that's gone into this recovery plan, and you've already mentioned that, it does carry the support of labor and the support of business. And, I think one of the things we often underestimate is that in a crisis, as South Africans, we have this unbelievable ability to get together and do extraordinary things. I participated in a conversation on debt last week in Washington, virtually, that is, and with a lot of very sort of well-known people from all over the world. And everyone around the world is struggling with economic recovery and potentially facing significant debt issues. We're not the only country, and I'll say a little bit about that in a minute. But what was different was that as soon as this pandemic, the country went into lockdown, business got together, both as business formations, as organizations, as individuals. I have never worked quite as hard, frankly, and I was retired. But people gave of their time, of their resources, of their business resources, across voluntarily. And a lot of their business time, business resource time, their organizations without attribution. And so the President's Recovery Plan carries all of those inputs. And so it does have a significant amount, a huge amount of buy-in. And the plan is comprehensive. So we should recognize that. We should also recognize that we are in serious trouble as a country. We're not the only ones, but we are in serious difficulty. And part of it is because when COVID hit us, as we all know, we were already in a recession. And so we were not we're not in a strong position. And we're already facing a significant debt problem. And so on the back of having to put in place an emergency program to deal with a crisis, our debt numbers are really quite serious. And at the moment, virtually all of our country's domestic savings is being used to finance the government's debt. I mean, I think the government at the moment is borrowing something in the order of 80 billion rand a week. So we talk a lot about the IMF's package, but that basically covers about a week and a half, 2 weeks worth of what we borrow in the domestic capital markets. And we are very fortunate as a country that we have deep and liquid capital markets, so we can fund ourselves domestically. I should also tell you that there isn't a single country on this continent, including South Africa, that has been able to borrow in the international capital markets this year. And there are about 7 or 8 countries now who are at risk of a serious debt crisis across the continent. South Africa is not one of those, so I just do want to make that clear. But as you would have seen in the financial press, Zambia is trying to negotiate with its creditors around a default. So having said all of that, I think the President's Recovery Plan is comprehensive, it's good, it's solid. It comes down to a very basic issue. As we all know, I think everyone on this call runs a business, big or small, works somewhere, has to do things. It comes down to our ability to implement in a disciplined way. All good plans, all good strategies are just as good as our ability to actually focus and to deliver consistently against that plan. And I think therein lies the challenge. It's just the ability for us to get things done and to get them. We don't have to get everything done, but we have to be clear about what the priorities are, and we have to get those priorities implemented, and to get it done appropriately and diligently and with energy. And I think that's going to require, it is going to require, quite frankly, not, not people like myself, because it's nice, it's, it's very nice and very kind of you to say nice things about me, and I am very thankful. But I know that on this call, and I know that in the BMF, there are a huge number of people who are capable, are competent, are smart beyond belief. And this country, and actually this continent, needs you. You at that time in your careers where you can make a difference. I can at best mentor people, but I shouldn't be, the DG of anything, or the CEO of anything. This is the time for people of my generation and of my age to be mentoring, to be sitting as a non-executive director on a board or something. It's the time with people of your generation, most of you, if I know the sort of profile of the professionals in the BMF, more or less, this is your time. And to do that, you need to have the commitment, the resilience, the investment in your careers, the focus that is required, and the country needs that, and the president's going to need that in and out of government, but in government too, in order to deliver on this ambitious plan, and not for 6 months or a year or 2 or 3. This is going to take 5, 6, 7, 8 years in order to deliver consistently to this plan. On Transnet, I'm delighted they're going to turn a profit. And I don't know what they're going to do with it. So you say they're going to pay dividends, which is interesting. But actually, I also hope they're going to have a conversation with their shareholder about retaining some of that to invest in some of the infrastructure. And because I think that's what SOEs ought to be doing. Not, they need to turn a profit, absolutely, in the right way. They need to be properly governed. And I'm also happy that the Hawks are doing what they're doing, and we need to get on with that. But they need to turn a profit so that they can, if there's money to pay dividends, fantastic. But we need to be investing in the infrastructure, in rails and port, and primarily so that the country can get back onto the growth path. And in fact, President's Recovery Plan needs that. Thanks.
We're ready for the challenge. We are happy to take the hit, but obviously we'll need the guidance and the wisdom that comes with it from the likes of you. I'm gonna bring you back to the topic, and I think most of the time when we look at financial inclusion or digital financing, we're looking from an individual's point of view, or the man who was financially unbanked. But there's a burning question, there's a burning desire to see how financial inclusion would help benefit small businesses besides consumer finance. But what are the benefits that would come with digital financial inclusion for small businesses? But also, what are some of the constraints that small businesses will face that tech can help remove or help address?
Well, that's a fundamentally important question. And in fact, one of the things I should have said about the President's Recovery Plan, he does talk about the green economy. And I was actually, I was hoping you would say more, not only about the green economy, but about climate change and about digitalization and ICT, and that he would be that he's going to be hard on the people who are supposed to be doing the spectrum auction and the digital migration, without which we can't get any of this done. And actually, one of the things out of the B4SA report is the importance of that rapid deployment policy and taking away all of the uncertainty around it. But one of the catalytic opportunities identified in the report is exactly around around small and medium enterprises. And that's not just a South African or African problem and challenge and opportunity. It's a global opportunity. And so the report actually talks a lot about that and about the opportunities there. And it talks about both some of the regulatory changes that are available. The example I spoke about in Zimbabwe is actually about using data through a payments using what was started off as a payments platform. They've partnered with a digital exchange called IX in New York, and they've got some money from the UN, from one of the UN development funds, to convert that into something that will create a platform which is designed to deal with funding small and medium-sized enterprises that require funding, more sustainable funding, if they're going to grow. And so, yeah, I think the report recognizes that it's a huge catalytic opportunity, that there is a significant amount of money available in savings globally, and it's how unlocking that. We have the benefit on the commission, on this task force, of having the CEO of Ant Financial Services, and the work they do is unbelievable. I mean, their ability to collect data, to use data to develop product for not just individuals, but for small and medium-sized enterprises is phenomenal. But again, in order to have that, you need to have a number of other building blocks. So you need to have the ecosystems. You need to have data, broadband capability, for example. But we shouldn't forget also people, and we shouldn't also forget the investment in education and skills that are required. Data engineering, coding, etc., are all very important parts of this equation.
Let me see what question to take. So there's a big statement being made by one of our guests that people need banking services, but they don't need a bank to be financially, which is very true. But I think with the non-traditional players now coming into the space of somewhat providing financial services, I think of when the telco providers started offering mobile money, and not only that, it came with interest, and which was slightly playing into the space of savings, but also where the banks are playing. Don't you think this would house, as much as we need financial inclusion and other players to come to the fore, but don't you think this will create some form of tension between the various business players, especially if the regulators don't talk to each other, because then also each of these entities are regulated separately from the main line? And have you seen areas where you've seen better coordination between various regulators of various players? Maybe the M-Pesa in Kenya, how has the banks taken that into, because then it plays into their space, significantly so?
You know, it's a very interesting question. So the thing, if you're a bank, you're regulated in a particular way. You have to carry, amongst the things you have to do, you have to hold capital. And if you know anyone who's ever been in banking knows it's highly regulated. Holding capital is expensive, and everything. It's you know, getting a banking license is not an easy thing to do. Keeping your banking license is equally difficult and challenging. And so you have you know, you offer a range of services. You often don't just offer one service, although some banks only offer one or two products. We know that. But there is a very high bar from a regulatory point of view. If what you're doing is if you come into the system as a fintech and you're providing a payment platform, right? You just come in through a payments platform and you're offering a payment solution. You're not a bank. You're not subject to the same regulatory constraints as a bank. You don't have to carry capital. You don't have the costs of capital. So you don't have the same, I suppose, burden as a bank has. But for some people don't. They actually just want that product. They just want one product. They just want a very basic payment platform, a online, you know, bank account that allows them to deposit some money. And in fact, if you're depositing money, and you're taking a deposit of any, you could sort of stray into the definition of a bank. But for a lot of these payment platforms, they take money and they transfer the money. They're just offering just a payment service. And that's a different space. That's a different environment to be in. And I think the market is big enough to accommodate all of these things. But you'll also have seen that the traditional banks, not just in South Africa, but across the world, are spending hundreds of millions of rand. If I add, you know, what's being spent outside South Africa, in South Africa, across the African continent, and if you add what's being spent across the world, it runs into hundreds of millions of dollars in technology, in digitalization, in acquiring fintechs so that they can compete and keep up. But they are being disrupted. They've been disrupted by people who provide, you know, different products cheaper, more efficiently in that space. But they're providing one or two, you know, they're providing a very specific set of products. Banks often provide a lot more than that.
So there's no competition.
Well, no, I didn't say that. I did not say that. I think it's a highly competitive world and will remain a very competitive world. But I don't think there's anything wrong with competition. And if you know, I'd say I used to say that very often as the CEO of the bank. We had competition was getting tougher and tougher, and I can only imagine it's going to get tougher and tougher.
That's fair.
And it should be, if you look at it from the client's point of view, it ought to get tougher and tougher.
Exactly. I think what's important for the client is convenience, whichever way a client or a customer is to access financial services.
And convenience, not just in terms of location, but convenience in every aspect of that, in the price point, from a price point of view, from a product point of view, from a location, how you served, how quickly you're served, and you have to be served 24 hours a day, irrespective.
We are running out of time. We still have a couple of questions, but I would spare you the pain. What we will do, sorry for those that I'm not able to ask your questions, but I'm hoping that some of the responses that Maria gave spoke to some of the questions you addressed. At least I could find the link from her responses to the questions that I have not read out. But I think just also building up from the conversation we had with Uma Pumzile last week on women, and it will be unfair for me not to look at how digital technology can help empower women economically, especially in an emerging context, emerging market context, as most women in the continent, they're normally out of work and they need to be more industrious to survive. Do you think there's space? Obviously, I think the answer will be yes. But then how do we then fast track digital technology, especially for women, to benefit women?
Well, I'm sure Pumzile probably said something about that because she was very active in this task force around that. Is there space? Absolutely. Absolutely. But I also think this is more than just, again, this is not just about products. It is about making sure that there is access, that we have the right product, that we are spending money on digital education, that we are spending money on the ecosystems that put digital product and services where women need them and where women are. And we in the report comments on the fact that often the reason why the products are not being used is because in some places culturally it's still not okay for a woman to have a bank account. I know it's hard for us to believe that, but that is still the case. So those are some of the barriers that have to be overcome when we talk about these things and when we talk about creating digital enablement. So we need to make sure that we constantly addressing that we're creating the products that women need, we're making those products available, we're doing the digital education that is required, we're investing in training and skills development, and we're creating the access for women. And we're consciously doing that. It's not kind of saying, oh, we've now developed the product. Should we put two features here that look like we're thinking about women? That's not the way to do it. We have to actually start with thinking about who is the client here. Are we targeting these products in the right way? Are we targeting them at communities, at women, and for what purpose? And actually, that's where I think financial institutions, particularly traditional financial institutions, need to and are becoming more agile. But they need to create that agility. They need to become more agile. They need to compete more in that space if they are going to stay relevant in this market that's being constantly disrupted.
Thank you, Maria. Maybe we can, if maybe a last concluding remark, or statement, or challenge, or a call to the people in this room on how to drive financial inclusion. And whilst you do so, maybe you can touch on how you think South Africa is performing on this subject. What can we do to fast track the implementation, or at least understanding of the report from the task force?
We spoke a lot today about financial inclusion, and you said it's not just about individuals, and it is not. It's as important as it is that we think about financial inclusion as individuals. It isn't just about individuals. It is also about being conscious of the fact that actually everything across this chain in financial services is being disrupted. And so we, just um, being conscious of that, being involved in these debates, in these conversations, and these discussions is fundamentally important. So I sometimes think that we almost need to lift our level of of engagement and consciousness about how fast this space is moving. And I say that simply because when we started writing this report, we said to ourselves, by the time we finish, you know, this was even before COVID. By the time we finish writing the report, there are going to be parts of it that are no longer relevant because because this thing is, digitalization and the entire space of technology would have moved on. And that is true. But, we can only stay abreast of it if we are conscious of it and if we are engaging and if we're talking about it. And it's particularly important if we are going to make the recovery from COVID different, and we can't ignore the fact that I said at the beginning that that poverty is complex. It's complex because we're dealing with COVID, we're dealing with climate change, and in some countries across our continent, but across the world, there is also conflict. And they, as we think about and financial inclusion and digitalization and digital financing, we at least need to think about it in terms of its place in recovery, the ecosystems that are required, how we engage with it, and how you all engage with it. I can tell you 5 years from now, you're going to be working and living in spaces you will not recognize today. The world is changing that fast, and we need to make sure that we can keep abreast of it. And then I think from a recovery point of view, we also need to hold policymakers' feet to the fire. The stuff I spoke about just from a South African point of view. I think the recovery plan is a very good plan, but it needs to be implemented. We need some priorities. We need to get some things done, and we need to get them done now. There's no reason why we cannot move on the spectrum auction or the digital migration that's been on the cards for such a long time. We need to get that rapid deployment policy sorted out, the high demand spectrum. We need to make sure that we make progress towards 5G. Otherwise, we're going to get left behind. And the more we get left behind in this round, right, the tail of that, the risks associated with that are not just 5-year risks or 10-year risks. They're generational risks. And they're going to be very hard to catch up. And the world's moved on. So I think avoiding those generational risks, and they're not, when you look at risk and you look at tail risks, these are not thin tail risks. These are big fat tail risks that we're going to carry if we don't make these changes, if we don't make these investments, if we don't invest in the ecosystems and the infrastructure required for digitalization to take place. And without that, we can have some financial inclusion, but we're not going to change we're not going to benefit from all the other component parts of it. So we should go and do things differently. There's more opportunity there.
Thank you so much. One of the key takeaways for me from this evening is that financial inclusion is necessary to ensure that our economic growth performance is inclusive and sustained. You've said a mouthful, And I want to thank you for your time. I want to thank you for engaging us and willing to take as many questions. And also thanks for bringing me closer to my PhD proposal on financial inclusion.
Okay.
And
Oh,
now
good
that,
luck with your PhD proposal.
sorry?
Good luck with your PhD.
Thank you so much. I'll come to you for more input now that you're
Anytime.
do the net for my PhD. Thank you so much. We
Thank
will
you.
engage with you from time to time as the BMF, and thanks for always availing yourself. And yes, there is no retirement when it comes to development and leadership, upskilling of people. So thanks for your time, and
No, thank you.
everyone who attended. Just to remind everyone, we've got our last webinar on the 30th of this month with Mr. Sipho Pijana, looking at labor, government, and civil society working together to deliver economic transformation. Thanks for your time. Good evening and enjoy the rest of your evenings. Thank you. Bye.
Thank you. Thanks, everyone. Thanks for joining.